AI, cloud computing, and deep tech are creating transformative investment opportunities. Just last week at London Tech Week, Jensen Huang, the CEO of NVIDIA, talked about how every industry will become a tech industry. Investment in this space is in the hundreds of billions, and we're going to discuss the opportunities now with our next panel. Please welcome our moderator, Jacques Demers, chair of 7+7, to the stage, and his panelists. Thank you.
Good morning, everyone. A terrific panel we've prepared, and the approach we wish to adopt to leave some room, if possible, with some of our time shortened, is each panelist will have 5 minutes to present the thoughts they want to present, what they're up to, what their particular focus is. I'll ask a couple of questions after they finish, hopefully stimulate some discussion here among the panelists. If anyone has a question during the panel, we should find a way for it to somehow find its way to me discreetly, and then we'll try and leave 5 minutes at the end for some questions. And on that note, we'll start with Matthew. Matthew.
Jacques, thank you. Good morning, everyone. It's a pleasure to be here in London with you and the gracious hospitality that the city always extends. I represent TXSE, which is the parent company of the Texas Stock Exchange. We are the first applicant in the United States equity markets in the last quarter century that is proposing to build a fully integrated securities exchange that will facilitate the trading of cash equities in both US and foreign listed stocks, exchange traded products, as well as offer a myriad of data services. So trading, listings, and data businesses is the focus of the Texas Stock Exchange. I have responsibility for our data businesses. To give you some context as to why we are undertaking this initiative, consider some statistics in the equity markets in the United States. Since 1996, when the number of corporate listings peaked in the US at 8,000 companies, that number, since that time, has declined by nearly 50%. At the same time, the rise in private equity has made up for a significant source of capital. Curiously, today, there are as many private equity firms in the United States as there are public companies. The trend, ultimately, of the decline in the public companies creates a problem for a range of investor groups, pension funds, and a number of others that are increasingly limited in their access to quality public companies with which to deploy capital. Consider another interesting statistic. Our listings criteria for corporates would only allow roughly 60% of existing public companies in the United States to be listed on the Texas Stock Exchange. And yet, of the total $60 trillion of market capitalization of US public equities, the 40% that can't list on us represent less than 500 billion. It is disconnected in the equity markets in the United States today as to the problem that has allowed to be created in the atrophy of public markets by the two incumbents. Our objective, if successful, is over time to correct and reverse this trend. Why Texas? Several reasons. Few things you may not know. Texas now has more finance professionals than the state of New York. In infrastructure, in regulation, in land, in power, a number of attributes that coincide with the topic of this panel come together and converge to facilitate a robust environment for new development, including of securities exchanges. So, over the course of the next few months, pending approval from the SEC, we will launch trading in February of 2026, which will be followed by listings of exchange-traded products, and then finally, launch of corporate listings. We have been fortunate to capitalize the Texas Stock Exchange primarily with investment from family offices. Our thesis from the beginning was that we do not propose to have any artificial timelines or objectives with when monetization needs to occur, but rather family offices that have a long-term vested interest in the success of equities markets broadly in the US and globally. We're fortunate that combining those groups are some powerhouse financial institutions with whom you all partner, notably BlackRock, Citadel, and Schwab, along with several others, including Fortress, Susquehanna, and the list is long. It's a pleasure to be here with you in this panel.
Thank you very much, Matthew. That's quite informative. Now I'll turn to Benya.
Yeah, good morning. My name is Benya Gebreyesus. I'm here representing the Africa Finance Corporation. We were created about almost 20 years ago in answer to the question posed at the African Union, what would a development finance institution look like if it was funded with African capital, led by African talent, and solving African problems with a uniquely African perspective. So when we were first set up, it was the Central Bank of Nigeria, which seed funded the first 40% of our capital, and then crowded in through a very clever public-private partnership, the balance 55% from the largest multinational commercial banks on the continent, several high net worth individuals, and multinational corporates from as far afield as China. We were initially capitalized with $1 billion in cash equity. We've now grown the total balance sheet of the organization to approximately $15 billion. We focus on infrastructure, including power, transport, heavy industry, telecoms, technology, oil and gas, mining, and sovereign lending. The group that I look after is the heavy industries, telecoms, technology sectors. And when we first entered this space, we were making debt and equity investments to try and really focus on the bricks and mortar infrastructure, so connecting Africa to the broader global economy. One of our very first investments was in a cable from Portugal landing in Lagos with stops in Ivory Coast and Ghana. We expanded that business to include data center presence in each of those markets. And then in about 2 years ago, sold that to Equinix. We saw an opportunity where first it was Digital Realty, establishing its presence in South Africa, and then in Nigeria, followed by Equinix trying to kind of catch up because they see that in Africa there is a huge digital infrastructure growth opportunity. If you just look at India as the model, because they have a similar population, for relative to the whole continent, and a similar GDP, but it has 3 times the data center capacity that Africa does currently. And in fact, by the end of this year, it will have nearly doubled that capacity already. So we see in the next, call it 2 to 3 years, the opportunity to deploy at least 1,000 megawatts of data center capacity across the continent, which speaks to both our activities in not just the telecoms and technology space, but also in the power, renewable power space.
Thank you very much, Benya. That's informative. Now turn to Murad.
Thank you, Jacques. Well, thank you very much, everyone. So my name is Murad Sofi, and I work at SimCorp. It's the technology arm of the Deutsche Börse Group. That's the German exchange. So we're present across the world. I run the Middle East and Africa entities, where we have a pretty heavy presence in the region. And by default, we do work with most of the financial institutions out there, usually to try and help with strategic asset allocation from a technology perspective, risk management, portfolio optimization, and then just have a technology framework in which all those holdings would sit together. And so instead of talking about what we do as a company, I'd like to talk about what we do with our clients. And our clients are essentially some of the world's largest asset owners, including many of the sovereign wealth funds out there, many of which are in this room. So thank you for your partnership there. And because I run the Gulf entity specifically, I do come across quite a lot of decision making that goes into the process of how do we diversify the portfolios that we have today. Most of those sovereign wealth funds, especially in the Gulf countries, have been set up initially to try and diversify the economy away from oil. And so we've seen across the years a move more into stock market, fixed income, more into the private equity and private credit. But now really the revolution and the trend that we see in that space is that more and more money is being poured into technology, whether that's AI, whether it's data centers. There's a clear shift in that space. And so if you look at some of the headlines that we've seen over the last few months, you see the magnitude of what's being done in that region. If you take the example of the Public Investment Fund for Saudi Arabia, that piece alone represents about $100 billion that is being invested in data centers to try and have sovereignty from a data center perspective and increase the capacity to have the region as a hub, as a global hub. Similarly, in the UAE, something very similar is happening there, where you have, again, about $100 billion that is being invested in a similar space. And so there is a clear shift that is taking place right now, when we'll come later to the pillars that are key to making a hub stand and become a lighthouse in this space. But it's clear that what is being poured in terms of amount of money into the region to try and make it a central hub for innovation and not just a consumer of these technologies is clear to everyone out there.
Thank you very much, Murad. And last but not least, we can turn to Temulen, or Temi, as you wrote in one of your notes, please.
Right. Thank you, Jacques. It's a privilege and a great honor for me to be here to learn from some of the most distinguished guests in the capital markets and also exchange views on how we can best take our Mongolian Sovereign Wealth Fund forward. So I'm here, traveling from all the way from Mongolia to here just to explore partnership opportunities as well as, learn about the trends and upcoming, interesting projects in the pipeline zones around the world. So a little bit about Mongolia Sovereign Wealth Fund. So for our country, it took us 17 years to build consensus to finally be able to drive the mineral wealth into investing into human development as well as critical infrastructure projects. So our organization is very young, probably as young as myself here in the room. So we were just established in February this year and currently in the process of developing our investment strategy and so on and so forth. But the key mandate of our Sovereign Wealth Fund is, first, majority we will be looking at global markets, investing in the areas of sustainability as well as infrastructure. And we're also, second of all, I think also aligned to today's theme of our discussion, funding the future. So the Sovereign Wealth Fund itself is mandated to dedicate a portion of its fund to also talent pipeline for Mongolian citizens. Third, last but not least, but obviously we're looking at welcoming foreign investors and institutional investors to look into infrastructure projects in Mongolia, and we'll share the risk. Basically, we're happy to co-invest into some of the critical infrastructure projects into Mongolia for our ambitions to connect or build connectivity across East Asia in terms of telecommunications, connectivity to even transport logistics, as well as data center connectivity, data infrastructure as well. So let me stop here for now. I'm sure Jacques will have further questions for us to lead on. So yeah, very happy to be here, and I'd love to meet with each and every one of you to learn what you do and also whether there are any opportunities for collaborations available. Thank you.
Thank you very much, Temilin. So a number of things come out of your introductory comments. One that we touched on in preparing for today's session was perhaps the important ingredients or pillars, as Murad referred to it. When one looks at a hub, a tech hub, perhaps in addressing that as well, what's the importance of a tech? I'm asking, for many, this may be an obvious or superfluous question. What's the importance of a hub? But energy, security of supply of energy, skilled labor. I know in the whole tech thing, there's a concern about the impact on human involvement and human capital. Skilled labor, is that important? If so, in what respect? And lastly, security. And what I mean by, and skilled labor draws us in as well, because we all are alive and want to live a life a certain way. So there are many traditional real estate, community type issues, education if you have a family, et cetera, but skilled labor. And then lastly, security. So cybersecurity, but also just basic physical security. So we have different regions here that you're more familiar with. Maybe I could just throw this open. I can either start again or see if anyone's courageous enough to put up a finger and kick off this discussion amongst yourselves initially. And if there are questions, again, I reiterate, if someone just indicates to me that someone has a question by note, we may have the audience start to interject.
I'm happy to offer two observations.
Go ahead, Matthew.
A few of these categories. One of the situations that we are currently experiencing in the US and more particularly in the southeast quadrant of the United States, which is where the lion's share of GDP growth is occurring, is the scale of infrastructure investments. Consider two futuristic sounding projects in Texas alone. Stargate, which is OpenAI's $500 billion investment in an AI data center in Abilene, Texas, with planned energy capacity needs of 1.2 gigawatts alone. And then most recently, Galaxy's announcement of what is, as of today, planned to be the largest data center in the world until perhaps next month when something displaces it. In West Texas, that is approved at 850 megawatts on the way to 1.7 gigawatts. So the scale of investments that are large consumers of energy are going to have to be reconciled with what is the source and balance of clean power that will be put in place. Texas ranks number one in the United States in clean power in our portfolio of overall generation. That surprises many people. California is a distant second by half. And so the balance of all of these give rise to a whole myriad of questions, including physical security of footprints that are hundreds of acres, combined with cybersecurity need and the collaboration across government, private sector, educational institutions to provide solutions for that over the long run is advancing, but still in its early stages in the markets that we're in.
Yeah, I mean, if I could add something to this question, one of the bugaboos that we hear about is this tension between the high energy intensity of data centers and, are they displacing consumption that could otherwise take place by consumers or industry? And I think maybe that's a factor in more developed economies. But ironically, we really see these kind of power-hungry consumers of energy with relatively stable, reliable demand characteristics, acting as anchor consumers for new renewable energy projects on the African continent, where we're looking at mega projects in South Africa, Morocco, one even looking like a 3 to 10 gigawatt solar installation that would be looking to export energy here to the UK. The challenge of finding an anchor tenant or an anchor power off-taker and that problem being solved by the data center industry actually catalyzes the development of some of these renewable energy projects. So, one of the things that we've observed is it doesn't always have to be an either or, and in fact, these power-hungry consumers can be a catalyst for new development.
Maybe just to jump on this one, because clear energy is clearly one of the key ways to fund the revolution in a way, the AI revolution in a way. But when we look at the Gulf, obviously there are two things happening. There's the historic fact that the region is oil rich, and so there's a lot of that energy that is there to be used to power all the needs that all these data centers are hungry for. But at the same time, there are many, many initiatives that are aiming to diversify away from oil-based energy and go more into renewable energy. And we've all seen some of the mega projects out there, whether it's solar or others, like the NEOM one, for example, where the idea is to have enough renewable energy to be able to power all these massive data centers that exist today in the region, but that will exist in the region in the future. And so I think overall, it's just not a case of whoever has energy today will be able to power it. It's also a case of putting in place the infrastructure needed for the renewable energy, clean energy. And you've given the example of Morocco, where it's not an oil-rich country at all, but there are many initiatives of exporting renewable energy from an oil-poor country into Europe. So that's a testament to the fact that even the oil-rich countries today are looking to diversify away from that heritage that they have. I guess we can tackle labor and security after you tackle them, I guess.
Demi?
I mean, I agree with you all. The power is an essential ingredient on meeting the demands of the data infrastructure, data activities and operations needed to power the growth of technology industry. But then another issue that's often overlooked is the water issues and the climate impact and so on and so forth, right? And I've been I was previously in the role at the Digital Ministry of Mongolia. We have leapfrogged quite a bit in our digital journey in a very short amount of time. And what I noticed when I was there was that for small markets like Mongolia, obviously you look at the hotspots around the world, such as Texas to US, North America, Africa too, right? But when you look at the investment, I guess geographically, then 30% of about the investments into data infrastructures around Asia Pacific, and the hotspots would be in countries like Singapore and Japan, Tokyo, and so on and so forth. But increasingly, these companies are increasingly looking at other locations like Mongolia as an alternative place to develop their projects with green energy and so on and so forth. And the Mongolian government has been very forthcoming on that front in terms of policy, environment, as well as attraction of investments. We've been working with EBRD to envision some of the green technology companies and energy grid builders to make ourselves ready for that next rush. But having said that, I guess I have to address the part of the manpower issue, right? So the talent pipeline, like Sovereign Wealth Fund, we're trying to play a critical role in terms of developing the AI literacy to AI talents, to other technology development capabilities within Mongolia, as well as welcoming talents from overseas for knowledge transfer purposes. So when you see it, I guess the flows and the moves in the bigger picture, obviously financing becomes a catalyst, but then looking at this, unfounded or unrealized, untapped opportunities elsewhere in countries like Mongolia would be, I guess, very interesting for you guys.
So maybe just jumping on the last points about talent. When you look at some of the stats, you have 85% of the global AI talent that's concentrated in 7 countries across the globe. And so by default, you'll have shortage of talent in any new hub that you're trying to set up. Now, there are different ways of amending the problem. What you see happening in the Gulf countries is essentially 2 things. One is literally buying talent, so through acquisitions of many companies out there that are heavily invested in this space. Attracting talent coming from overseas as well through all kinds of expat programs. And we've seen the attractiveness of a tax-free environment, a very safe environment. I think that there was a stat, not really to do exactly with this topic, but 11,000 millionaires left London for Dubai just in the last 1 year. And so there's a clear pattern here of people moving to places where they can find better lifestyle to a certain extent, a tax-free environment and safety overall. And so you see that as part of that pool of people going in there, there's a big portion of it that is to do with the AI talent in general. And then there's building local talent as well. And so we've seen, whether it's in the UAE or in Saudi Arabia, many initiatives of putting together some of the best universities out there to try and build talent from within. If we take the example of Abu Dhabi, where the Mohammed bin Zayed University for AI has been established a few years ago, it's now top 20 in the world, where it's really helping massively in bridging the gap that exists in the talent space there. So that's from an education perspective. Then you have from an industry perspective, initiatives like G42 in UAE or Humane, that is part of the PIF in Saudi Arabia, that are literally companies just focusing on the AI. And so by default, you have talent coming from the US, from London, from Asia, from all kinds of parts of the world, which really is helping enriching the scene in the AI space in that region.
Yeah, no, I think for Africa, the talent problem is a bit unique in the sense that you have these very large, particularly say in Nigeria, Ethiopia, populations, and across the continent, all populations are relatively young, and so there are initiatives developing this talent. But too often, the opportunities, the job opportunities aren't there for this talent. So it's actually leaving the continent. The historical brain drain that Africa has always been a part of. And one of our initiatives is really to disrupt that. So we're partnering with the founder of one of the first tech unicorns in Africa. He had created a group called Andela. And what they did was essentially outsourced developer services and other kind of software IP work, based in different parts of the continent. And, we found, okay, one, similar to not just Pakistan, but we've seen it in other Southeast Asian countries, that talent is there in Africa. And if the opportunities to do the work at home, where people can stay closer to their loved ones, they take it. But then a lot of times the tech hubs aren't there. The regulatory framework isn't there to ease this. So actually, the new initiative we're taking on with that founder is setting up digital free zones. The first one in Nigeria, but looking to replicate this again in other markets like Ethiopia, Rwanda.
Make an entirely different comment. the intersection of power, AI, and education. For those of you that follow the nuclear industry, in the last 12 months, there have been 2 landmark transactions in the United States. One of which was the Microsoft arrangement as the off-taker for the recommissioning of one of the reactors at 3 Mile Island, which for those of you that may remember was the site of the worst nuclear accident in US history. Microsoft is an off-taker of what will be an extension of that license of the functioning reactor to support one of its data center needs. Less than a month ago, Meta agreed to be the principal off-taker of the output from another nuclear power plant in the Midwest United States to balance its clean energy portfolio. So nuclear is going to see a resurgence in the United States. The historic challenges with regulatory approval from a number of federal agencies are being worked through. And increasingly, you'll see at a state level widespread interest in SMRs. So, as an asset class in infrastructure, nuclear, for the hundreds of billions and eventually trillions of dollars of investment that will require, sovereign wealth funds, large family offices have an important opportunity. Ask yourself this question: how many nuclear engineers are there in the United States that aren't on the verge of retiring? The pool is shrinking. And so, from an education standpoint, one of the efforts underway is how do you train more engineers in a field that largely was ruled out some time ago? Collaboration with universities and other sources to support this is going to be essential for that particular energy source to make its way into the energy mix. And over time, I don't know, how long is it before someone proposes a data center that needs 3 or 4 gigawatts of capacity? There's not a lack of land in certain parts of the country. It'll just be power. And so it seems as if the trend is underway where that will be an active part of the portfolio.
Very interesting. Nuclear is now à la mode, or in fashion again. One comment that came up which intrigues me is, I think, Benya, you mentioned it, and Murad, you may have referred to it, is this reference to sovereignty. I wonder if I could get a little more in the world today, a little more input of thoughts around sovereignty of what? Data, of information, of managing the information. Can I throw that out to see who you want to start with that?
It's fine, because one of the reasons, again, we talk about the huge data center opportunity in Africa. It's shocking I mean, I don't know how many of you have dealt with government officials working for African governments. Most, if not, many, if not most, of their email addresses might end in @gmail.com. So you're talking about, dealing with officials from the Ministry of Finance, the Ministry of Foreign Affairs, who are operating off of their Gmail accounts, where all of this data is, going back to Virginia, maybe Texas, and not secure at all. That's at the government level, but then also at the industrial level, you have the same problem. At the healthcare level, you have the same problem. People's information not being secure. Now, unlike, say the North America or Europe, where you have a lot of this data sovereignty legislation, one of the problems for the African governments is that the chicken and the egg. Like, you need the legislation to drive demand. If you have the legislation, it can't be effective if you don't have the data centers. And I mean, that's one of the things that we're again looking to solve for by really investing in the rapid expansion of data center capacity on the continent.
Maybe just, oh, sorry, go ahead.
If I may just add into the mix from AI sovereignty point of view, right? So now countries are grappling with whether to develop their own supercomputing capability to be able to I guess at least keep up with the race, right? And so on and so forth. And we see many countries doing that. Like, if I look in my region, Central Asia, in the past few years, we all know that it costs a lot to build that supercomputing capability for your own countries, for your own AI sovereignty purposes. But the question remains whether the countries, even small ones, require that economy. Do we have that economy of scale to build that? Does it have a viable ROI at the end of the day, and so on and so forth? But still, I think that the hype is there. Yet at the same time, we're thinking about security issues around it, right? The biases around AI as well. So countries are still investing, but in our region, we see Kazakhstan for the first time built it in the Central Asia region, and Mongolia as an institutional investor coming in from sovereign wealth fund perspective. We're also closely watching this space, whether small countries like Mongolia, small markets like Mongolia would require one. If so, what would be the viable technology to build it with scale, and the scale optimum for the purposes that our small language is required on? Yes. So yeah, we have a very short time, so let me stop here and pass it over to the other panelists to react.
Yeah, maybe just quickly on the sovereignty of data, and just to continue what my colleagues here alluded to earlier. So you see that whenever you want to go and do business anywhere in the world, usually especially in the cloud space, usually the first question is, do you have local data centers? And so it doesn't matter if you're Microsoft or Alibaba or Amazon, you still have to have that localized data center, because by default, people feel more secure with data being close to them. And so this goes also with the infrastructure that those countries are putting in place as well. And so one of the things that we're seeing in terms of the data centers being built, again, if I take the example of the Gulf countries, these are looked into as security important as an embassy. So you have blast-proof type of walling that those data centers have, very deep into the ground, all kinds of security measures just to make sure that not only does the data reside within the walls to a certain extent of the country, but also to have it as secure as possible. First of all, to legitimize the positioning of that hub as an international one, so people can then store the data within your walls, but also for you to be able to build and not being hostage to whatever happens somewhere else in the world. So I just want to stop there.
Okay.
One of the things that we've observed, though, ironically, is that where the grid is failing is at the last mile. So, for example, in Nigeria, if you go to any business or consumer endpoint, you have a very unstable grid where you have maybe close to 50% downtime over the period of a month. But ironically, the core of the grid is stable, and so the projects that we've looked at need to connect with 330 kVA lines directly into the core of the grid, where actually the uptime is 98%, sometimes even better. But where you're looking at the distribution at the local level, it's deplorable.
Our application contemplates foreign companies accessing capital through our exchange, through a combination of listing scenarios. Absolutely. Happy to visit offline about that.
Join me in thanking our panelists in this initial panel for the information they've shared.